The EU's efforts coming just as Gazprom is poised to restart gas flows through to the Nord Stream, and that was sort of what boosted European equities certainly overnight, the expectation that the restart would happen on Thursday, albeit at reduced levels.
And it's not guaranteed. I mean, Bloomberg has learned from people close to the matter that Gazprom is going to finish maintenance on the Nord Stream. And let's take a look at the Bloomberg. You can see that supply levels have already dropped off. We're told that shipments will resume when maintenance ends. Again, Thursday is the date, and that they'll remain below normal after the Russian gas giant declared force majeure or act of God on some of the European clients. So it's very much a question for Europe, and we've got Europeans on tenterhooks. Will it begin to flow? Will it not flow? And that's why the EU is moving quickly to propose a voluntary 15% cut in that gas use by the member states, which would start next month. Again, on concerns that perhaps Russia may full stop halt supplies, and that would be catastrophic for most of Europe. We're told the goal will be part of a demand reduction plan the EU is going to unveil on Wednesday. Again, how to cope with this. It's supposed to start off as a voluntary demand use reduction and a mandatory use reduction would be triggered if this is not sufficient or if the situation worsens. Meanwhile, take a look at natural gas prices. They've just continued to rise. It began with the pandemic and a lot of supply reduction, and then with Russia's invasion of Ukraine, it's just completely exacerbated.
What's the latest on oil? I mean, we continue to see the fluctuations in the energy space there.
Yeah, well, this is an unusual day because we've got the expiration of the July contract, the August just beginning to trade. And what we saw was two very strong days here in the U.S. Risk-off sentiment, so that West Texas Intermediate was above 104 and continued that trading in Asia. Analysts point out liquidity is thin right now with people away on holiday, and that means there's more machines than humans, a reference to computer-directed trades. There's a view we're continuing to see West Texas Intermediate trade in a very technical band, and notably the September contract, which right now has the biggest open interest and is more heavily traded, is down slightly in Asia trading. So we're beginning to see that recent three-day rally that perhaps is also related to the dollar begin to ease. Now, oil trading in general continues to be choppy for energy in recent weeks. This is traders weigh concerns that a looming recession is going to hurt demand and fallout from the stronger dollar as we have a tight supply. And Brent, interestingly, the nearby Brent futures contract are trading in excess of $4 higher than the second month. And that's a huge premium that indicates refiners are willing to pay up for barrels. So we're starting to see differences in month to month how these contracts are trading.